Assalamu alaikum everybody. Welcome back to my channel Rapid Revision. Today's video is this basically is a question from May June 2024, paper 2 variant 1. The question is based on sales journal and a general journal here, and also there are a few other questions, calculation questions, and then there is a control account question in this particular question. So they have put a mix of uh, 2-3 different topics in this question. The question here says Ado is a trader who only sells on credit. His trade receivables at 1st April 2024 were as follows. So he had 4 trade receivables at the start, and the total trade receivables obviously here is 3658. This is the total for all the trade receivables, but we have 4 customers, basically 4 credit customers. Trade receivable is also called credit customers in accounting. So then we have during April 2024 the following transactions took place. So they have these set of transactions, and in the first part they are saying prepare the sales journal and total the sales journal and indicate the ledger account to which the total would be posted. So basically what comes in the sales journal is the credit sales of inventory. So whenever we are selling inventory on credit, so we'll record that in our sales journal. So I'll simply basically just basically when I read the transactions, I will get to know which transactions will go in the sales journal. So the first transaction here says April 2nd, sold goods to Ava, list price 150 less 6% trade discount. So if you take out 6% of 150, you will get $9. So $9 is the trade discount that Ado is giving to Ava. Also, they are selling goods on credit to Ava because at the time of sale, because they only sell goods on credit. That's the first thing which we read in the first sentence. Also, at the time of sale, we give a trade discount which is not recorded in accounting. So basically, in my sales journal, I will record the amount after trade discount. So this is basically going to go to the sales journal. So I'll just highlight this transaction. This will go to the sales journal. The next transaction here says April 9 received telephone transfer from Ava 689. So this is basically the double entry for this would be bank debit, Ava credit. So this will not go in the sales journal. This is a cash book transaction. This will not go in the sales journal. April 12, sold goods to Nuru 165. This will go in the sales journal because obviously this is credit sales. The next transaction here, April 13, received check 627 from Mahia in settlement of an invoice of 660. So basically Mahia, we might have sold goods to Mahia previously and the invoice was $660. So she was supposed to pay us $660, but we are giving her a cash discount of $33 in this case because she's giving us a check of 627 for an invoice of 660, which means $33 is the discount we are allowing her. So this is discount allowed. This is basically cash discount which is given and taken at the time of payment. So this is also not going to be recorded in the sales journal because this is not credit sales. For this, bank will be debited 627, discount allowed account will be debited $33, and the account of Mahia will be credited by $660. So this is not going to go in the sales journal. Next transaction, received 760 from Nuru by electronic transfer. Again, electronic transfer, telephone transfer, all the bank transactions. So Nuru is sending money to us by electronic transfer. Nuru had deducted 5% cash discount. This is not going to come in the sales journal because this is again it's a amount of money that we are receiving, not credit sales. In the next part, the next transaction, Nuru returned goods $30, which means this is sales returns. We have sold goods to Nuru in transaction 1 on April 12. Now Nuru is returning goods to us. Then again, April 21, sold goods to Mahia, list price 480, trade discount 5% and cash discount 5% if the invoice is paid within 30 days. But we'll basically just record the trade discount. The cash discount will not be recorded because when we are selling goods, this is the terms that we are deciding that okay, if when we are selling goods, we are giving Mahia a discount of 5%, but when Mahia pays us within 30 days, we will also give her another 5% discount, that will be cash discount. But this is not going to be recorded in the sales journal. In the sales journal, we'll just write the amount after trade discount. The cash discount will be applicable when she'll make the payment to us. This will go in the sales journal. Yes, 480 multiplied by 5% will give us $24 is the discount in this case, $24. And the amount after discount will be obviously 480 minus 24, which will be 456, but which we'll record in the sales journal. Rachel has become bankrupt and Ado decides to write off the amount owing from her as irrecoverable. So this is not going to go in the sales journal because it's not credit sales, but there is a related question in the next part related to irrecoverable debts. But first we will deal with the sales journal. So sales journal is very simple. We have 3 transactions that we are going to record in the sales journal. I'll simply write here April 2. I'll write here Ava, and I will write here 150 minus $9, and this will be 141 for the sales made to Ava. Then I will write here April 12. I'll write here Nuru. I'll write here 165, and then I will write here April 21. I'll write here Mahia, and I will write here 480 minus 24, which will be 456. And when I total this, so my total will come out to be 762. I'll write here April 30, and I'll write here transfer to the sales account. So the total of the sales journal will be posted to the credit of the sales account. Sales account is always credited whenever we are making sales. You credit the sales account and debit the trade receivables account. So trade receivable Ava will be debited with 141, Nuru will be debited with 165, and Mahia will be debited with 456. Okay, in the next part they are saying prepare the journal entry to write off the amount owing by Rachel. A narrative is required. So it's very simple. This is the transaction basically that we are going to record here. Rachel has become bankrupt. So Rachel owed us 215 at the start, and we haven't done any transaction with Rachel in the rest of the transactions. So that means 215 is what you have to write off as irrecoverable debt. So I'll simply write here irrecoverable debts debit 215 and Rachel credit. Rachel's account will be credited because Rachel was our customer. She had a debit balance in the Rachel in accounts of Rachel. We had a debit balance and Rachel owed us basically 215. But because Rachel is not going to pay us anymore, we'll put this amount into the irrecoverable debts account and credit the Rachel account here. And this will be April 30. So I'll simply write here April 30. And then they're saying a narrative is required, so I need to write a narrative for this. So I can write here to write off the amount owed by Rachel. So to write off the amount owed by Rachel. So that's it. So the marks distribution, simply they can give you like there's 1 mark for this when you are debiting the irrecoverable debts account. 1 mark is to credit Rachel account and 1 mark is for the narrative. So to get all the marks you need to also write the narrative. Then you will get all three marks here. Calculate the total amount of money which Ado received from trade receivables during April 2024. Okay, so there are we need to see we have how many transactions in which we have received money. So received telephone transfer from Ava. This is a receipt of money, so I'll make a star here. Then we have received a check of 627 from Mahia in full settlement of an invoice of 660. This is again an amount that we have received. Received 760 from Nuru by electronic transfer. Nuru had deducted 5% cash discount. This is also what we have received. So now I'm going to add these 3 amounts. So we have 689 that we have received from Ava, I think Ava. Yes, 689 is received from Ava. 627 is received from Mahia. So I'll write here 627. Plus there is one more trade receivable. So there is who has paid us. So we have received 760 from Nuru. So I will write here 760 from Nuru. So this is from Ava, this is from Mahia, and this is from Nuru. and when you add all these three, so you will get the amount that you have received by from your trade receivables, and they have used electronic transfers, bank transfers, telephone transfers. So all of these are basically bank transactions. You are receiving the money in the bank. The total amount of cash discount which ADO allowed in April 2024. So we will see where does ADO allow the cash discounts. So I'll use another color here. We received telephone transfer from AVA 689. This transaction doesn't mention that they have given a cash discount to AVA. Received a check 627 from Mahia and full settlement of an invoice of 660. This is where I told you guys that yes, the invoice was 660, but Mahia paid us 627, which means $33 was the discount that we allowed to Mahia. So yes, 33 is for Mahia. So I'll write here Mahia. I write here $33. Plus there is another, yes, when we received a check from Nuru 760, Nuru had already deducted 5% cash discount. So this is interesting. Why? Because whenever we are transferring money to someone, so if that person is giving us a discount, right? So we will always transfer the amount after discount. So 760 is the amount which Nuru has sent us, and this amount is after discount. 5% has been deducted from this from the original amount. So that means 760 is basically 95%. So what is 100%? So when we calculate the value of x here, so you will get 800 in this case. So that means $40 is what is the discount that we are allowing to Nuru, because she owed us 800, but she's paying 760 to us. So I'll write here $40 and I'll write here Nuru on top. So this is going to be 73, which is the total discount allowed by ADO to Mahia and to Nuru. So these are the two customers who are receiving the cash discount. Okay, the next part here says prepare ADO's sales ledger control account for April 2024. Okay, so sales ledger control account, I have always told you guys that it's a total trade receivables account. So the total of trade receivables account. So it starts with a balance brought down on the debit side. Trade receivables are your assets. Assets have a balance brought down on the debit side. I'll write here 1st April 2024, and then I will basically write the total of this. So basically all my trade receivables, Nuru, Mahia, Ava and Rachel, were at the start of the month. These balances, all of these balances, when you add them, you get 3658. So total trade receivables at start were 3658. So it's at the start of April, total trade receivables were 3658. And then during the month, we have sold goods on credit of 762. So sales journal total is also the sales amount in the sales ledger control account comes from the sales journal total. So yes, you need to write here sales, and you'll write here 762. So notice, why are we writing this on the debit side? Because trade receivables will be debited, sales account will be credited, and this is a total trade receivables account. So you need to record this on the debit side of the sales ledger control account. Then we have a sales returns. Yes, we have sales returns in this case. Sales returns is coming from Nuru. We have the bank amount, that the money that we are receiving from our trade receivables. We have a discount allowed, which we also have calculated in the previous parts, and there is an irrecoverable debt which we have written off during the year. So all of these things are going to reduce your trade receivables. So if you know the journal entry for sales return account is debited, trade receivables is credited. When you receive the money from your trade receivables, bank is debited, trade receivables is credited. Whenever you're allowing discounts to your trade receivables, discount allowed account is debited, trade receivable is credited. So this will come on the credit side of the sales ledger control account, because this is total trade receivables account. And whenever you are writing off an irrecoverable debt, writing off a trade receivable, so irrecoverable debts account is debited because it's an expense account, trade receivable is credited. So like here we credited Rachel, right? So we basically were crediting a trade receivable. So total trade receivables will also be credited with irrecoverable debts. So we'll just write the amounts here. So for sales returns, we have This is my sales returns, $30. Nuru is returning goods to us, $30. That's it. Only one customer is returning goods. All of the other transactions don't talk about returns. So only transaction in April 20 is going to tell you about returns. So I'll write here $20. Then we have a bank amount here, which we have calculated in part C, part 1, the total amount of money which we have received, Ado has received from his trade receivables during April 2024, which we calculated was 2076. So I'll write here simply 2076. Then we have the total cash discount which Ado has allowed in April 2024, which is $73 to Ado has allowed to his customers. I'll write here 73. Irrecoverable debts, we have written off the amount owed by Rachel, 215, and basically we have written off one trade receivable, so I'll simply write here 215. Now I've put all the transactions in this which I was supposed to, which was related to total trade receivables. Now I'm simply going to calculate a balance carried down here, and the balance carried down will be, on the debit side, my total will be, the balance carried down will be 2026. So when I calculate the total, so the total will be 3658 plus 762, which will give me 4420 on both sides. So 4420, 4420, and then this balance carried down, I need to make it my balance brought down. So balance carried down will be on 30th April, and this control account is also 30th April. All the dates are 30th April basically. 30th April, 30th April, 30th April. This will also be 30th April 2024, and this balance brought down will be on 1st May 2024, because we are preparing the sales ledger control account for the month of April in this case. And that's it for the calculations part. Then we have a theory question here which says Ado is considering changing his credit terms. He would introduce more credit checks on new customers, also would increase the cash discount to 7.5% for payment within 30 days. So if you offer a greater amount of cash discount, that basically attracts more customers, because yes, other competitors might not be offering this much cash discount, so it is easier to attract more customers towards Ado will find it easier to attract more customers towards his business. They're saying here, advise Ado whether or not he should make these changes to his credit terms. Justify your answer by providing two advantages and two disadvantages of changing his credit terms. So I've written it for you guys here. If Ado introduces more credit checks, this will reduce irrecoverable debts. Yes, because credit checks means that you keep reminding your customers again and again of the amount due, and you keep calling them, you keep sending them reminders. So it's a good thing to have credit checks. Then also, because Ado is introducing extra discount, this will encourage customers to pay earlier. Yes, because they'll receive a greater discount if they pay earlier. Also encourage more customers to buy from Ado, because yes, this will attract more customers. Since customers are paying earlier, this will also improve Ado's liquidity. Yes, cash flow will improve because customers are paying on time. It is easier for Ado to now pay his suppliers on time. Then, however, the increased discount means the expense of discount allowed will increase. Yes, discount allowed goes in the expenses section of the income statement, and if the discount allowed expense increases, your profit will be reduced. This may reduce profit for the year. Also, Ado may have to hire someone for increasing the credit checks, of course, because yes, he might need to have an employee to remind customers again and again, and keep track of all the customer data, which will also increase his cost. He should introduce the increased discount and more credit checks. Yes, I am basically in favor of introducing more credit checks and increasing the discount, because yes, increasing discount attract more customers. Improving the credit control reduces the chances of irrecoverable debts, which is a very important thing, because we really don't want the customers to take away our money and go. But then that is how you by increasing by improving credit control and increasing credit checks, you can just recover all the amount. So that's it for this question, guys. Thank you so much for watching. I hope this helps you.